Binance, the largest cryptocurrency exchange in the world, halted Bitcoin withdrawals not just once but twice within a 12-hour period. And this comes at the same time that their US arm, Binance US, is selling Bitcoin at nearly a $650 premium to customers, as people are worried about impending legal action towards Binance from the CFTC. Now, this comes at a time when both the Bitcoin and Ethereum network are extremely congested, causing transaction fees to soar, and we're going to break down exactly what this means for the two biggest cryptocurrencies by market cap, as well as a couple of coins that we are looking at to make money off of both the Bitcoin and Ethereum network congestion. So starting things off here with the biggest and most concerning piece of news, crypto exchange Binance halted Bitcoin withdrawals for the second time on May 8th, citing a large backlog of pending withdrawals. So here you can see the tweet. They say, "We've temporarily closed BTC withdrawals due to the large volume of pending transactions. Our team is currently working on a fix and will reopen Bitcoin withdrawals as soon as possible. Rest assured, funds are safe." There is a large volume of withdrawal transactions from Binance still pending, as our set fees did not anticipate the recent surge in Bitcoin network gas fees. Our team is working to accelerate the confirmation of all pending transactions. We will provide updates here. So here is the update where they did in fact resume withdrawals on Binance. They say pending transactions are being processed by replacing them with higher transaction fees. And this is the first thing I do want to mention, is when they talk about network congestion here, this does not mean that the Bitcoin blockchain was not working. It is always working. It simply means that Binance did not want to actually process these transactions while the gas fees were high. Once again, making the point that Bitcoin that is not in cold storage is not your Bitcoin. The exchange can choose to hold your Bitcoin essentially hostage until gas fees come down to save themselves a penny, and it is not actually Bitcoin that you personally own. The exchange owns it, and this is a perfect example of why we say not your keys, not your crypto. Now, they say here, to prevent a similar reoccurrence in the future, our fees have been adjusted, and we will continue to monitor on-chain activity and adjust accordingly if needed. Our team has also been working on enabling Bitcoin Lightning Network withdrawals, which will help in such situations. At the time of Binance halting Bitcoin withdrawals, the mempool had a backlog of around 400,000 transactions waiting to be processed, and this swelled to nearly 485,000 at the time of Binance's second withdrawal halt. And essentially, a mempool is an area where transactions on the Bitcoin network wait before being verified by each blockchain node. Now we can take a look at what is happening here in the Bitcoin mempool at the moment, and there is still about 417,000 transactions that are unconfirmed, and the network congestion really has not cleared up much since Binance did initially halt their withdrawals. Now, at the same time that the Binance Global Exchange halted their BTC withdrawals for customers, we can see that they are selling Bitcoin to customers at nearly a $650 premium. So you can see here, if you're actually comparing Bitcoin to USD on Binance US versus the Bitcoin to USD pair on Coinbase, that Binance US is charging just over a $650 premium when compared to Coinbase, their largest US competitor. So people are anticipating here that this likely results from market makers leaving the exchange in anticipation of regulatory action, and market makers are entities tasked with providing liquidity to the order book. So basically, if there is some sort of government action against Binance US incoming and market makers who usually do business there know about it, then it's possible they left and there simply is not enough liquidity and possibilities for arbitraging are diminished. And what they're referring to here is the fact that back in March, Binance CEO was sued by the CFTC over willful evasion of US laws and unregistered crypto derivatives products. So we can see here that the CFTC is charging Binance with violating laws and offering futures transactions, illegal off-exchange commodity options, failing to register as a future commissions merchant. Furthermore, according to the CFTC, Binance, the global exchange, has a US affiliate in Binance US, which is basically a system created to hide its true reach and operations. So Binance US was essentially launched so that Binance, the global exchange, would not be subject to regulatory action in the United States. But the CFTC says here that Binance's reliance on a maze of corporate entities to operate the Binance platform is deliberate. It is designed to obscure the ownership, control, and location of the Binance platform, the filing said, adding that Zhao answers to no one but himself. Moreover, the suit alleged that Binance directed customers in the US to use a variety of methods to evade restrictions on US-based customers, such as VPNs or virtual privacy networks. So that is one reason people are hypothesizing that Binance US has recently been charging a large premium on Bitcoin transactions for customers. And another reason I can't think of is the fact that the Bitcoin mempool is still in fact backed up here, as we did mention earlier, and this has caused Bitcoin transactions to soar. So we can see here that if we actually take a look on the 1-year chart, that currently transaction fees on the Bitcoin network are costing about $30.91 per transaction. This means that the Bitcoin network is incredibly congested. There is more demand for these transactions, and it also means that miners are making a killing right now on validating these transaction fees. Now, to put things into perspective, because there's going to be a lot of FUD here, a lot of people saying that this is why Bitcoin is not usable, that Bitcoin can never work, and they're going to use this to shill their favorite altcoin that has some faster stats than Bitcoin or something like that. You can see right here that in April of 2021, Bitcoin transaction fees actually came in at about $62.79 per transaction. So this is not the first time that the Bitcoin network has experienced some very high transaction fees. It's probably not the last time it will as well, but you can also see here that just as they come up, eventually the transactions do come down, and that's because eventually Bitcoin transactions reach an area so high that people simply are not willing to pay anymore, and that is why the network fees eventually do come down. It's not like transaction fees are going to infinitely shoot up until you're paying $1 million per transaction for Bitcoin. Now, additionally, a lot of people do like to conveniently ignore the fact that Bitcoin does in fact have its very own layer 2 solution in the form of the Lightning Network. And the Lightning Network is a layer 2 solution for Bitcoin that effectively makes its transactions both faster and cheaper, which does make Bitcoin also inherently not just a store of value, but also an effective transfer of value via this layer 2 scaling solution. So a lot of people will point to the Bitcoin network congestion, completely ignoring the fact that there is a solution in the form of the Lightning Network. And since launching here in March of 2021, we can see that the Lightning Network had about just over 1,000 Bitcoin here on this layer 2 solution, and that is now up to about 5.1k Bitcoin and growing. I think as time goes on and as more and more people do adopt Bitcoin and more people do want to use Bitcoin for everyday purchases and transactions, that the Lightning Network will be more adopted. Now, the same thing can be said here for Ethereum, also experiencing a ton of network congestion. And taking a look at this visual chart here, we can actually see how Ethereum gas has been since the merge. And you can see here that Ethereum gas has really been soaring ever since the beginning of April. And we can also take a look here at Ethereum average transaction fees, and right now it would appear to be costing at a beta of about 0.002 ETH per transaction, and you can see it pretty much is approaching 1-year highs at the moment. However, if we zoom out once again and take a look at the 5-year chart, you can see here that back in September of 2020 as well as May of 2021, that Ether gas fees were much higher than they are at the moment. Once again, we have seen this before, and I'm sure we will see it again. That is why Ethereum also has its very own layer 2 solutions. And that kind of brings me into the final portion of this segment, where I do want to talk about some of these layer 2 solutions and why I think they're going to be some very good money making opportunities in the next bull run. So Ethereum layer 1 is expensive. How much does it cost to use a layer 2? So for Loopring, it costs about 16 cents to send ETH and 46 cents to swap tokens. For Arbitrum 1, it costs 33 cents to send ETH and about 87 cents to swap tokens. Polygon ZK EVM is about 60 cents to send ETH and about $2.30 to swap tokens. And then Optimism coming in at 0.74 to send ETH and $1.09 to swap tokens. All the while, Ether, to actually send Ethereum via the Layer 1 blockchain, is going to cost $4.07. And to swap tokens, it is going to cost about $20 as of the time this data is in the video. So we can see here that Layer 2 solutions are effectively a big way of actually scaling Ethereum, of making it faster and cheaper. And the way they do this is by bundling up some transactions, basically taking it off chain, confirming it in one transaction, and then putting it back on the Layer 1 solution of Ethereum. And that's how it does allow this blockchain to scale. There is actually a very, very good infographic here on the Polygon ZK EVM, where you can see that they basically take a bunch of transactions. They contain the proof that is basically scaled in a single batch on the Layer 2, and then it is sent back to the Layer 1 block to be transacted. So it's no wonder that these chains have seen a ton of adoption in recent months. In fact, let's take a look at Arbitrum, Optimism, and Polygon. As if we take a look here, Arbitrum and Optimism are the two biggest Layer 2 scaling solutions. Polygon, this is the Polygon sidechain, not the new Polygon ZK EVM, which is their very own Layer 2 solution. So we're going to focus mainly on Arbitrum and Optimism, both of which do have tokens where there is money to be made, in my opinion. So taking a look at a year back here for Arbitrum, you can see transactions were coming in at about 85 to 100,000, currently sitting at 876,000 per day on average, after peaking at about 2.7 million back in March of this year. Now taking a look at Optimism here, back in May of last year, coming in at transactions about 81,000, and currently now at about 148,000 transactions. And last but not least, we have Polygon ZK EVM, which did just launch here at the end of March, and we're currently seeing it do about 1,700 transactions per day. And I do expect this to grow as time goes on, as more and more people begin to become knowledgeable of this Layer 2 solution, as it did just launch back in March, and the launch was celebrated with Vitalik himself making the very first transaction via this new Layer 2 scaling solution from Polygon. So it's no wonder here that Layer 2 solutions, I mean the two biggest ones in terms of Arbitrum and Optimism, sit in the top 10 blockchains by TVL, as clearly there is a lot of demand for Ethereum and for blockchains that help scale Ethereum. And we can see here that this is definitely the proof in the pudding, right? Like Arbitrum has about 2.94 billion in TVL, Optimism at 882.98 mil in TVL, and taking a look right now at 24-hour volume, Ether has about 1.93 billion in 24-hour volume, with Arbitrum coming in at 443 mil. So about 20% of all 24-hour volume here is coming from Arbitrum when compared to Ethereum. And that does, in my opinion, set up a very bullish thesis for Layer 2s in the next bull run. So taking a look at these Layer 2s here, we're going to start from the cheapest and actually work our way up. So Optimism is all the way down here at the moment. Where is Optimism? Optimism is chilling right here in 75th place with a current market cap of 536 million. Now, considering the fact that Optimism has 882 million in TVL locked up on the platform, that means it is actually trading at a discount when compared to the TVL on the blockchain. Now, taking a look at Arbitrum here, which is further up on the list, we did talk about this in our top 10 list for the month of May. And Arbitrum comes in here with a market cap of 1.39 billion. Meanwhile, it has 2.94 billion in TVL on the platform, so trading at about a 50% premium, even more when compared to the TVL on this chain. Now compare that to Ethereum, which has 50.9, was it? Where is it here? 50.17 billion in TVL, but a market cap of 222 billion. This means that Ether's market cap trades at over a 400% premium when compared to its TVL, while both Arbitrum and Optimism are trading at in and around 50% discounts when compared to their TVL on the blockchains. Given that these Layer 2s are the key to scaling Ethereum, I think it will be a key theme in the next bull run, and that's why I am looking at mainly Arbitrum here on any sort of dip to potentially load the boat and hold this for the next bull. So on that note, if you did enjoy the content in today's video, you know what to do. If you made it all the way to the end, you are an absolute champion. Let me know in the YouTube comments down below and claim that champion status. I hope you are all having an amazing Wednesday, and I hope to catch you in the next one. Peace out for now.